Hello, everyone. It's John Makarewicz. We're here on the Multifamily Investor Playbook podcast, and we're mixing things up a little bit on this episode. We actually have a guest here today. Today's guest is Micah Mattox. Now, Micah is the managing partner of the multifamily practice at Realprotect Insurance. He's based here in Atlanta, close by to me, which makes it great, although, covers properties all over the United States. Micah leads the charge in designing insurance, custom insurance, and risk management strategies for real estate investors across the U.S. And Realprotect insures over 500,000 units nationwide, leveraging deep industry relationships, speed, and data to deliver smarter, scalable coverage solutions for multifamily owners and operators. We've had the pleasure of working with Micah and his team at Realprotect on every one of our transactions. And that was after vetting multiple vendors. And Micah, the first thing that jumped out to me was just the speed of communication, the way you close the loop. We work closely with Banks, one of your team members, but you've just been fantastic to work with. Now, I'm going to share something that may surprise you, but we've been doing this podcast now, Mark and I, for really since the beginning of the year. And we're just at around 60 or so episodes. But believe it or not, our most popular episode so far was the one we did on flood insurance that you helped us with some of the data points
Yeah.
on. So when Mark and I were sort of talking about who should our first guest be, it was like, has to be Micah, because obviously this stuff is top of mind for people,
Yeah.
right? So, candidly, I don't think I would have guessed flood insurance would be that exciting for people, but it's obviously something that's
Yeah.
top of mind. So we'll
Mhm.
probably dive into that a little bit. But how are you doing today?
Absolutely. No, doing great and really appreciate the opportunity to, come on here and, talk to everybody and just add value wherever we can. We appreciate the kind words. We've loved working with you and the team and, just kind of helping push the charge forward. And I know there's many more to come. So really, really excited.
Oh yeah, no, for sure. We want to keep you guys nice and busy. Diving in, I'm going to give an example or two. So, we have a friend in the industry, and it was interesting. They got insurance coverage, and they thought they had the right kind of coverage, but I suspect they were moving a little too quickly. And so, for example, what they learned the hard way is that with named storms, their coverage wasn't really appropriate. And so, sure enough, a hurricane came through. They had some extensive roof damage, which ended up in a capital call, right? So, I'm prefacing that just to kind of roll into this next question. So, what are the most important types of insurance coverage that multifamily owners need to be thinking about right now in today's market?
Absolutely. A great question. And I think you hit the nail right on the head. I think a lot of that comes from just diligence. But I think to take that even back a step further, I think for a lot of owners, insurance isn't your day to day. It's not what you're focused on. You're focused on the deal, the health of the deal, getting the capital together, and the hundreds of other things that are on your plate day to day. Insurance is a component of that. It's an important one, but for the average owner, it's not something they know inside out. I will pride us on that. I think we do a good job, when it comes to just explaining, in just normal conversational language. Hey, here's what this is. Here's what it means. Here's how it works. I think that is, and there's a lot of other agents and brokers do a really good job at that. I think that's a huge piece of it, is being able to talk through something, a certain scenario, and every property is different geographically. It's going to have its own risks, but having somebody you trust that you can go to who's going to walk through that, and then listening when that explanation comes across. When it comes to the specific things to look out for, like I said, a lot of that is asset specific, can be geographic even. I think the hottest topic right now, which is very different than a few years ago, in 2023, 2024, the property insurance, the actual structure coverage, was in a really bad spot when it comes to the entire insurance marketplace for multifamily owners and operators. Right now, that's improved a bit, and we are seeing a lot more challenge, unfortunately, on the liability side.
Mm.
And we're seeing two key things happen. It's claims driven. As with all types of insurance, liability is a bit trickier. With a property insurance, it's pretty immediate. If the building burns down, you know it the next day. If a storm comes through, it's pretty immediately apparent. Hey, something went wrong. We need to get this fixed. Liability can be years. Somebody trips and slips, or even something unfortunately more major could happen. Assault and battery, or a shooting, or something like that. And it could be years before you even know what happened and hear more about it, and before that becomes an actual matter you have to pay attention to.
Yeah.
We're seeing lenders that are being, and this is across the board, your major agencies, or even other loan products, folks are being much more strict when it comes to the requirements they have, and ultimately not a bad thing, because again, that leaves you with a high quality of coverage. In theory, the more that could happen, and that unfortunately does happen at a property, you're going to be covered for. The downside is, again, with all the claims that we're seeing, and we're actually about to put out a newsletter on the current legal environment and how that directly affects multifamily owners and operators. What we're seeing is just such an increase there that of course leads to, if you want that higher quality of coverage, it's coming at a much higher cost.
Yeah.
Sometimes higher deductibles, which liability deductibles, some owners are familiar with, some haven't had to really work with that before. So it's an entirely new concept they're having to learn. So all of that to say, a lot of factors acting in concert between lender requirements, between just the state of the marketplace. When it comes to liability insurance, I would say that's really the hot topic, if there were to be one right
Yeah.
this moment. Other things to look out for, again, if you're in certain areas, flood insurance, we kind of started off with that one.
Right.
Flood insurance is a big one to watch out for, and one that a lot of people really don't think about, but one that really, really can influence both, again, the coverage and the cost, that a lot of owners are facing if a property is in a flood zone, or just like we've unfortunately seen here over the past couple of years, certain parts of Kentucky, certain parts of Texas, that have been recently affected. Some of those areas actually weren't even in flood zones.
Right.
So again, that's kind of what it comes down to is, if it's in a flood zone, pay extra special attention there. But even if it's not in a flood zone, that's something that could happen.
Yeah.
There is a very big difference when it comes to cost. Something in a flood zone is going to be more costly. Typically, if it's outside of a flood zone, you can get something, some kind of, base layer of coverage pretty reasonably. And that may be something good to look into for a lot of people.
Yeah, no, you're dead on. I mean, gosh, being in both in Atlanta, I feel like it was about 14 years ago around St. Patrick's Day. And the reason I remember St. Patrick's Day is my wife and I were actually visiting some friends down in the Savannah area where they have like a very, well-known St. Patrick's Day kind of event. And we were turning on the news one morning and Atlanta had flooded. I mean, 85 and 75 major interstates were underwater. And at that time, I was selling residential real estate. And yeah, a lot of people who were not in a flood zone had flooded, right? And
Yeah.
so these maps get redrawn, right? I mean, new floods happen and, we're getting more rain. We've got some climate change challenges. So,
Yeah.
yeah, it's definitely something that's always top of mind for us. And that's why we love working with you, because you're thinking ahead and even thinking about things we may not be thinking about. But let's go back to the liability a little bit. So, going back to my residential real estate, I mean, the slip and fall stuff would happen in, maybe a listing, right? And so we see that. What was interesting is on our first deal we did, our property manager required some additional coverage related to gun incidents. And,
Mhm.
we were a little frustrated because, the property was area was low crime and had not had any of those issues. And we were even thinking of changing property managers. But by our second deal, to your point, the lenders were starting to require it. So is that just something that, because we're seeing more of that type of stuff, there's, more pressure on, the lenders to make sure that the operators are having this coverage? Is that kind of what you're seeing driving that?
100%. It's a total cost and effect, or not cost and effect, cause and
Yeah.
effect rather. Just where more incidents are happening.
Yeah.
And again, the difference between a policy that maybe doesn't have as much coverage in some of those targeted areas. The four big ones are, firearms, assault and battery, sexual abuse, and then animal attacks.
Yeah.
A policy that maybe isn't as robust in those areas could be a fifth, a tenth of
Yeah.
the price sometimes, versus
Okay.
something that's more robust that's really going to cover you a lot better. And frankly, not every deal can support that
Yeah.
without some serious planning and foresight and due diligence and care, from the ownership side. Lenders have really, really played a big role in the shift, I'll call it, between having those more thorough requirements. A lot of property managers have also required that. And really, that's just a function of them getting brought in on a lawsuit, something that happens on site. They're the first one to get brought in, but even some of the lenders, not that they're getting directly involved in some of these suits, but watching the asset suffer when the
Yeah.
appropriate coverage isn't in place, and then funds are being diverted, and so on and so forth. It just goes downhill, pretty quickly.
That makes sense. Yeah.
Fannie and Freddie released at the first of the year. It was December 15th for, I think, Fannie, and then 1/1 for Freddie. Released updated circulars basically saying, hey, as insurance coverage renews, here's our new guideline.
Yeah.
We're not really going to look at it midterm for the most part, at least. But for every property that has this loan type, when it does renew, we expect these coverages to be in place and to be buttoned up.
Yeah.
And that's done a couple of things. I won't go into crazy detail, but on the back end with the liability insurance marketplace, what that's done is it's really created a short supply because now everybody who agency loans are commonplace, if not the primary method of financing for a lot of these deals. Created almost a short supply because the liability insurers are saying, hey, we're kind of running out of capacity.
Yeah.
And a lot of people really wouldn't even think of insurance as a depletable asset. Just that's how it functions is, there's back end investors in insurance, just like you invest in real estate and many others do. And when they run short on capital, they have to hit certain metrics and, regulatory requirements. And they actually can kind of run out of space, if you will.
Yeah.
And that's kind of what we're seeing happen is the carriers that are able to offer this coverage are in short supply. More carriers are trying to enter that marketplace. So there's a large disparity between availability and cost right now. Again, just traditional supply and demand
Mm.
has kind of taken over. So that's what we're seeing right now. A lot of states, Georgia, for example, Georgia just passed a round of tort reform. Very much needed. We had a few things that were kind of out of whack with regard to truly what negligence means. In theory, negligence means you're having to do something or not do something that you should have done or shouldn't have done to be culpable. To be held accountable in a suit. In the state of Georgia, historically, especially for the past 5 or 6 years, a rogue butterfly, as I like to joke about, a rogue butterfly hits somebody and there's a lawsuit because that's just how the laws are written. So again, that's kind of shifting
Yeah.
in a positive direction. So long term, do I think that insurance, both in terms of cost and quality on the liability side, do I think that improves in Georgia? Absolutely. We're probably 4, 5, 6 years out from that happening, though. It's not going to be, turning on a dime.
Yeah.
It took a while to get, upside down, and it's going to take a while to get right side up.
That's right. Yeah. And from an ownership perspective on our side, of course, we have, restrictions on certain dog breeds, right, that are considered more dangerous. Also, size is a consideration. You do the maintenance to try to make sure the grounds are, clean and free of debris, fixing any sort of broken asphalt or trip hazards. So you can do a lot to try to protect yourself. But ultimately,
Certainly.
unfortunately, what I've learned is, things happen no matter how much you plan, right? So having that coverage is so important. Going back to my residential real estate business, and as you know, we operated in multiple states, but we're based in Georgia, and we
Yeah.
felt the impact of Georgia's looser rules on liability
Mhm.
because we would get hit with a just I would call them nuisance lawsuits, right? I mean, it was clear we had no liability.
Yeah.
In fact, for example, the seller saying, look, you have no responsibility if somebody trips and falls in our
Mhm.
property, right? In the listing agreement, but that doesn't stop you from getting sued, right? And
Certainly.
so we would
Yeah.
always win, but it was a hassle and it was a
Yeah.
distraction. So I was really happy when I heard about Georgia making some changes there. But yeah, on our side, it goes back to, as operators, we have to be as mindful as we can. Background checks, right, as a part of our screening process for residents. And you can't make those guarantees, but we always want to make sure we have the most possible coverage. And that's another lesson I learned. We had a situation once where one of our agents had their email hacked and they didn't realize it. And unfortunately, a buyer wired funds to a fraudulent account.
Yeah.
And we found out the hard way that we thought we had the right coverage, but oh, well,
Mhm.
that's a cyber thing. And so we had to cut a $50,000 check. So that was a
Yeah.
tough lesson to learn, but we,
Yeah.
wanted to make it right for our resident, or, in that context, I should say, our client. But yeah, it's just the world we find ourselves in today. So kind of in line with that, right? And I think I know where this will head, but insurance premiums are going up, right? And we can get into some of the reasons that's happening. But what can owners do to help manage costs without compromising coverage?
A few of those things you just touched on. A few of those things are just making sure that you're making the property as attractive as possible and as safe as possible. A lot of those things come down to normal capex that you're doing, replacement of certain items as needed, things like that. From a liability perspective, it really is that. I mean, you're going to do the best job you can to vet the residents, although that only goes so far because half the incidents we see, we'll call it, if not more, are a guest of a resident, and you really can't do anything to control that. If they
That's
invite a
right.
friend over and something happens, or whatever, again, there's only so much you can do. But when it comes to controlling the things you can control, again, a lot of the things you mentioned, keeping the premises safe and clean, fixing if there's a crack in the sidewalk or a stone comes off, or that piece of siding looks like it might fall, so things like that. A lot of it is kind of common sense, property maintenance, just things that you're probably doing anyway that are going to help out. And some of those things even convey on the actual structure coverage. Again, if you're looking at it and you're like, man, that really needs a coat of paint. It's not looking too great. Again, that can help out. Things like could be railings. It could be balconies or whatever. Again, a lot of the things that you would kind of cruise through a property and say, okay, we're probably going to put that on our capex list. It's probably going to be a pretty similar list that an insurance carrier would look for. In the residential world, and you'll probably laugh at this or agree, that the term would be curb appeal. When
Yeah.
you're going up to a property, that's thing number one is make sure it's attractive. For a lot of insurers, the first tool that they're hitting is Google. They're going to go look at a property, see how it looks. And again, not that that's 100% of their underwriting. It's absolutely not. But that is a really good initial test to say, okay, how does this look? How are the reviews online? And I know in the value add space that can be tricky sometimes because
Right.
oftentimes you're taking an asset that maybe it wasn't run well, maybe the property manager wasn't doing a great job, or a number of things could have happened, and you're creating value by improving it. So that's something
Yeah.
we have to talk through with underwriters to say, hey, I know you're seeing those couple of bad reviews, and here's the story. The property manager wasn't doing their job, and or the old ownership, or whatever the case was, but we're coming in and here's our insured. Here's their plan to improve it and make all these things right, and we're not going to see that in the future. So on and so forth. So, but again, a lot of that does come down to on the front end, making sure that you're putting the best foot forward of the asset, I guess is the best way to phrase that. Um, in a world where there are certain immutable things, if it was built in 1970, you can't change that. That's when it was built. If it's in Florida, it's in Florida. We can't really change that.
Yeah.
Can't pick it up and move it, nor would you want to sometimes. But again, a lot of this stuff is, I like to explain it as things that you're already going to be looking for, diligent about, and trying to fix as part of capex and value add strategies and things like that. A lot of those things convey when it comes to insurance.
Yeah, makes total sense. I think about our Largo property I mentioned earlier, right? Our initial per door cost was roughly 1850, I think, a unit per year, and then on renewal it dropped almost in half. And I know that was partly a product of more carriers coming back into Florida. A lot had left due to some hurricanes, and the free market kind of kicked in, and there's opportunity, and so new carriers come back. But felt like we had done a lot of preventative maintenance when we first took ownership, right? I mean, just the simple stuff, trimming back any tree limbs that are maybe hanging over top of the
Yeah.
building, and we did some water management, some regrading, just to make sure the water would run away from the buildings. And we've been happy to report that we had two named storms that impacted that property last year, and we had no claims, right? I mean, we did lose a little portion of a fence, and a couple gutters got bent, but we just handled that because
That's
why
table
get
stakes.
insurance
Yeah.
involved, right?
Yeah.
So it is a constant diligent process in my mind that the operator has to be thinking about what could impact and what could create a future issue or future challenge, and trying to get ahead of that. You'll never guess it all or get it all
Certainly.
right, but do as much as you can. So
You
and
mentioned
you're
something
such a
very
fantastic partner because you guide us in that decision making, right? Like, maybe consider doing this or maybe consider doing that, right?
You mentioned something very impactful there that I'll sidebar on really, really quickly, which is, the market, especially on the property side, has come back to that. We do have the free market back. Carriers are coming back in. Negotiation is a factor again, in a way that a couple of years it just wasn't.
Yeah.
And hand in hand with that comes the story. The underwriters are people. At the end of the day, we're going to either an underwriter or a team of underwriters, and they like to be told the story.
Yeah.
What happened. How's the owner come in? How's it performed? Both tangible and intangible. The tangible part is claims. Have they filed claims or not?
Yeah, right.
The intangible is, what have they done to improve it? Have they instituted certain management plans? Have they done the things that you mentioned, or similar things? And now that negotiation is back due to just, again, free market principles, we're able to go in and tell that story. The story is a huge, huge, huge piece of it because that underwriter discretion is back, because they're out there, they're competing, they have the handcuffs taken off to some degree, where they can listen and say, okay, I know maybe XYZ happened, or maybe we don't like these certain factors, but this ownership really takes it seriously. And right now we're looking for partners. Anybody can be a purchaser of insurance, but we're really looking for a partner and an insured that's going to do right by the property, and therefore, we're going to partner with them. And that's back on the table now.
Yeah, that's great. No, and that's why we love the partnership, man. Because you went out and found that for us, right? I mean, we didn't have to call you up, Micah, we need big savings, right? It was just it was something you and your team handled proactive. We loved it. So what would you say, like, what separates sort of your more savvy, clients, I guess, in a sense, from the rest and how they approach insurance? Like, what are the savvy operators really doing differently than maybe say a novice operator or one who's just looking for the lowest cost option?
Well, I would say both buyer types still exist, and they always will, just like with
Right.
any industry out there. We have seen a really, really big shift in owners that are taking insurance seriously. They're learning about insurance again to the degree they can or want to, but at least taking an active role versus 10 years ago, 20 years ago, insurance was an afterthought. You closed the deal on the way out of the closing table. You called your insurance guy and said, "Hey, I bought another one,"
Yeah.
and that was that. It wasn't really a factor, and that's just where the market was. But we've seen so many operators that have really, really taken it seriously in learning about insurance, learning about the function, maybe even sometimes a really, really savvy operator learning some of the markets and carriers. We were on a call the other day, and an operator kind of mentioned a few carriers, and I was like, "Wow, you've taken this seriously, not only to get how the market functions, but even to know who a handful of the players are." So we've seen a huge shift there, and that's awesome to see, frankly, especially from our side. I know you all have definitely taken that approach, but it's awesome to see because we can have a lot more intentional conversation versus just hey, here's this list of coverage we're going to provide, and here's why it's the best, and the response is, can we make it cheaper? Can we get it down? Which price is always a factor. It's a
Right.
business. You're running a business, of course. Um, but for a lot of folks, they've taken it so seriously that they begin to understand the importance. And I think part of that just comes from experience as well. I think that's the biggest thing that ends up creating a big separation for, like you said, a novice versus a savvy or experienced operator is just experience. If you're kind of on the novice side, we'll pick on liability again for a second. If you say, hey, I can get a policy for a tenth of the cost, maybe it's not going to cover some of those more important things, but we'll roll the dice. And then you own a property for 5 or 10 years or a series of properties, and things happen. But unfortunately, a shooting happens, or a fight breaks out, or whatever happens, and you begin to realize, oh man, there's a big difference here between what was quote unquote the most economical in the short term versus what ends up being the most economical in the long term and provides the best coverage, and really just make sure that we're not having to upend everything when we have something that isn't covered.
Yeah.
So again, I think it really comes back to the core of wanting to understand insurance and taking the time to say, okay, well, hey, I see the coverage here, but what does that mean? What does this piece mean? And if we have XYZ happen based on our geography or based on our operations, what does that end up meaning? And that really just makes for a good conversation, a good relationship, not only from insurer to insured, but from our side, from the broker agency side, to the insured as well, because again, we can kind of convey those things and discuss those things, and just come to a common sense solution there. So I think a lot of it just comes back to taking the time to, at least at the level you're comfortable, understand insurance, learn more and more, and the more dangerous you can be, the better off you're going to be.
That's great. Yeah. Now I'm going to ask this question because a lot of our listeners are either current investors of ours or people thinking about investing. So one of the questions we sometimes get is what does happen if, say, there's a major event and one of the buildings in the complex is down for a period of time. We're covered, right, for the replacement cost and all that, but obviously this is a business, right, and we have residents in there. So talk a little bit about loss of income insurance and how that works.
So there's a lot of different ways to cover it. The most common that we're seeing, and again, this is really just a loan function because the lenders have gotten savvy on what they want to see. They're requiring, in most cases, at least 12 months of income replacement coverage. Some have gotten more strict based on certain loan metrics or certain geographies, and they're even going as far as 2 years, and
Mm,
even in some cases three, which that gets pretty far out there and fairly expensive. But there are different ways to cover. The amount and the duration are the two big factors that you're looking for when it comes to, we would call it loss of income, but loss of rents, business income, all those things.
right.
Um, Again, the kind of the table stakes that we would see is 12 months. What that's going to do is that's going to replace during the time of replacement. If a building goes down, we're either going to repair it if it's repairable, or we're going to rebuild it if it's just too far gone. And we're going to basically cover that time period. The enhancement that you can purchase is not only the time period the building is actually down, but if you think through it, let's say you've got to rebuild a building. I'm going to make up a number. It's 24 units. At the end of that, you have a brand new building. That's awesome. You have a brand new building, but there's not any people in it.
Yeah.
So if the market, for tenants, finding tenants and doing lease up, if the market is good for that. Maybe you've done some pre-leasing. Maybe you have half, of the units pre-leased. So day one comes out, building gets its CO. You can automatically put some tenants back in there, and you just kind of lease up the rest. Not a big deal. Maybe you're right next to a lot of other locations, and maybe it's kind of hard to lease up. It's going to be a process. Maybe it's months, 3, 4, 6 months
Right.
to not only complete the construction of the building and that time period that you lost that income, but also the diminished income for the time that it takes you to fully release it back up. And typically we would call that extended period of indemnity. And that really, really helps out just to kind of take you from start to finish when it comes to a claim and make sure you're not missing out on that income
Yeah.
during that time period.
Yeah, that's great. No, thanks for sharing that. I think
Yeah,
that that's
it's a
something a
great
lot of our
question.
investors are curious about, right?
Yeah.
And yep. So let's just say we have a claim, right? Something major happens, or maybe it's a smaller thing, but still, it's a claim, right? What are some things owners or operators should be doing as a best practice to be well positioned when a claim does happen?
I think the biggest hurdle that we come across is record keeping. When things like that happen, having records of, okay, who was in there, what was going on. And there are a lot of sophisticated owners, of course, that track that very well, and the softwares that keep up with that, of course. But, helping to paint the right picture, that adjuster, let's say something, we'll say major happens, there's going to be an adjuster on site pretty quickly. If it's really, really major, multiple buildings are down, something crazy catastrophic, you're probably looking at 24 hours. Maybe it's, we have a building, something kind of, in the middle, it may be a couple of days before they get out there. But having kind of a toolkit that you can give to them, hey, here's how we were operating, here's how much leased it was, here's the metrics on the building. The more data that you can provide, just really speeds that process up. I think that's the biggest hurdle we come across is, claim happens and the adjuster gets there and they're like, okay, well, here's kind of a toolkit that I need to just fast track this for you, and then kind of do my side of it, do our part of it. Not having that data together, or not having an eligible manner, not having it updated, that seems to be a big hurdle that just causes delay.
Yeah.
Um, from there, it's typically pretty straightforward. Again, the coverage was in place, at the time of the loss. That part goes pretty smoothly. Typically, and the adjuster's going to come out there, and again, typically they do a very good job about making sure the process runs smoothly. We have seen a really, really good shift, I would say, just to kind of piggyback or go in a different direction real quick there. We have seen a really, really good shift in a lot of the adjusters that we're seeing in the marketplace that are just top notch, doing a great job. Again, typically when an adjuster is out there, something very bad's happened. You're having a bad day if
Yeah,
you have an adjuster out there. It's not a pleasant day.
that's right.
And they've really, gone the extra mile when it comes to not only bedside manner, but also just doing their job quickly and efficiently, getting a plan in place and making you feel comfortable with what they're proposing to do to get you back on your feet. We've seen a lot of carriers that have put a lot of time, money, effort into making sure the adjusters are top notch. So we see a lot of claims go very well just for that exact purpose, because it's been intentionally designed to do so, just in a general sense. But yeah, back to the kind of the main question at hand. I think just having your ducks in a row by the time they get there, if something does happen. And I would also say that, giving your agent or broker a call, that's typically step one.
Right.
Hey, we had this happen. What coverage do we have? Is it a claim? Is it not a claim? So on and so forth. And that's really what our job is to sort through that and, to kind of be that first line of defense to say, hey, we had a hurricane that leveled a building. That's a claim.
Yeah.
That's just
Right.
that's cut and dry. And here's the next step, and so on and so forth, kind of guiding you. But again, we do have that happen where something more minor happens,
Right.
and it's like, hey, we're kind of on the fence, and then we can kind of weigh that cost benefit, to say, hey, we're in a marketplace where the rates are doing X, and maybe this is on the smaller side. It's probably not going to do you a favor come renewal. Even though technically it's a small claim, but it may not do you a favor, and here's why. And just give you the tools that you would need to make that call ultimately on, hey, is it going to be worthwhile or not? But again, just having that sounding board, which is what we or anybody in our seats here to do, is just to kind of talk through that. That's a great place to start.
Well, and you've been an incredible partner in that regard. I mean, we really haven't had any claims, so we haven't really had to go through that process yet. But that responsiveness that you and your team have, quick to respond to any calls, texts, or emails, it just keeps us warm at night, knowing if something does happen, you're going to be there and have our back. For us, we take a lot of really a cautious approach to vendor relationships and making sure we're choosing the right ones. And I think you remember we actually had a handful we had talked to when we were working with one group, and then actually was the broker on the Largo deal we were working on, and said, you got to talk to Micah. And then, we called you, realized you kind of effectively live right up the street, and we met up for lunch. And it just, there was such a good positive feeling. Just, I
Yeah,
could get the sense that, your morals and ethics and ours were aligned, right, and how we do
certainly.
business. And so it's been a great partnership. So yeah, one final question, what external risks are you most concerned about right now, in terms of and what should property owners be preparing for? What do you see maybe coming down the line in the next couple of years related to insurance?
That's a really, really good question.
Get
And
your crystal ball out, Micah.
a
Come on.
little bit, a little bit. Um, a lot of factors. So on the property side, we can kind of break it down piece by piece. On the property side, in a general sense, just like we saw in Largo that you mentioned earlier, we're seeing the property insurance rates, in some cases stabilize, in some cases greatly improve. In some cases like Florida, where over the past, we'll call it 4 years, we've seen 50% to 100% a year increases. We're seeing those major, major decreases just because there is that fat to trim right now, so to speak. Um, there is a limit to that. Of course, it doesn't drop by 50% every year. But again, we want to secure that while we can. I think if we can, in a general sense, nationwide, if we can keep things pretty stable for the rest of the year, which again, it's not just hurricanes in Florida or along the coast and Gulf areas and so on and so forth. Convective storms, which again, think thunderstorm and things like that. Those have been on the rise. Wildfires have been on the rise. Floods, things like that. Right now, we're on track to have a fairly stable year. I know we've seen a lot of things in the news here recently about things going on, but in a general sense, we're actually tracking under what the claims have been for the past couple of years. That's the biggest direct influence to rates dropping, is of course for claims to be as stable as possible.
Yeah.
Versus 2022 and 2023, we saw just an enormous amount and an enormous severity per event, we'll call it, of claims coming in, which again just led to reinsurance going up. The insurers for the insurance company, those went up, which again just got passed back to the consumer. That's really the biggest factor in 2023 and even early 2024. All that to say, if things remain pretty stable, I think we're looking at a very similar property market next year, maybe even a little better, just as things kind of progress. What'll be interesting from there is to see kind of long term how that sticks, which again is just a direct function of what do we see happening.
Right.
If we have 4 major hurricanes between now and the rest of the year, that projection is wrong. Again, it's just that simple, just that easy, unfortunately, to shift. But again, if things are pretty stable, the rest of the year closes out strong. More reinsurance capital is going to continue to enter the reinsurance markets. That just drives costs down because of supply and demand availability. So again, if things are pretty stable, I think we continue to see property go down.
No, that's great. Yeah, it's interesting. I use this weather app on my iPhone called My Radar, and the reason I like it is because you get a weather thing saying, "Oh, there's a possibility of rain," but I could actually open it and see, "Oh, that's actually just north of us." Because we live down in the south. There's pop up thunderstorms all over, so it's
Left and
it's
right, yeah.
hitting Alpharetta where I live, but it's actually a mile away or whatever. So we'll be at the pool, and I'm like, "No, we don't have to leave. It's
We're good.
like it's
Yeah.
above us." But what's amazing is when I scan out and look at the whole country.
Yeah.
It's so scary because it looks like the entire West Coast, all the way up to Alaska, is on fire right now. You see the sheer amount of wildfires going on, and maybe I just wasn't paying attention, but I mean, that is a major, major factor,
Yeah.
I have to imagine, right on the West Coast. And we're seeing them on the East Coast as well, certainly. I know there was one up in, North Carolina recently. So, yeah, just so many factors. So I know you don't have that crystal ball I was teasing you about, but, one thing I will say is, so far, I know we're early in hurricane season, but that same app, it'll say tropical storm forming. And then a couple days later, I'm watching it. It's like downgraded. I'm like,
Yeah.
all right,
Yeah. Okay. The
let's keep
projection,
that trend going. Let's keep that trend going.
100%. The projection as it sits right now is, I think, at 18 tropical storms. I think 9 of those are set to be hurricanes and 4 major hurricanes,
Okay.
which is right about in line, plus or minus with what it was last year. And we watched just again, it fell under that,
Yeah.
by the time that last year's season concluded. So again, I'm really, really hoping for, similar results. That would be
Yeah.
great if it goes that way. And if not, we'll be here to deal with it.
Yeah.
But again, right now it's trending to look pretty good. I'm going to go ahead and knock on wood over here.
I'll do the same.
But
Yeah.
no, right now looks like things are pretty favorable, on that front.
That's
The
great.
liability side, to kind of split that back up, the liability side, we're kind of at a point where we're still swinging upwards, unfortunately. With regards to that, it's still getting tougher. Supply is getting lesser by the day if you look at it that way. I think we've got a little bit of a longer ride when it comes to that until that gets fully sorted. But again, just like all things, it's cyclical. It's going to come back around. It's going to level back out, and we'll come out on the other side. And I guess the one big benefit that we have seen is with such stabilization and decreases on the property line of coverage we're seeing, it's oftentimes eating up, even if we do see the liability go up, even if it doubles. It's such a smaller piece of the pie that we're still seeing net typically either decreases or just general stabilization there. So again, very, very different than 2023 or a market like that.
That's good to hear. Yeah, we've been feeling it, right, just in what we're paying and on our renewals, right? But I'm glad to hear that that's a trend you're seeing, and that will hopefully continue, right? Nobody can predict the future, certainly, but it was, gosh, in our early first year, I mean, we were like, deals weren't penciling because of insurance,
Mhm.
right? Like, everything
Yeah,
else looked great, it had all the right metrics, but then you plug in the insurance numbers and all of a sudden the returns were just not up
yeah,
to our standards. So we found a few, got them to work, right, even with those increased premiums, and those were just kind of those rare finds. But with that rate coming down, it's made it a lot easier for us to find those deals while also maintaining that exceptional coverage that we always want on our properties. So, Micah, this has been great. I really appreciate your time
yeah.
and your knowledge. So, if you're listening to this, in the show notes, we'll have some ways you can connect with Micah through social media or LinkedIn. Maybe if you want to reach out, if you're maybe an investor that operates some multifamily properties, you definitely want to talk to Micah. Um, if you're new to this style of investing, I'd encourage you to go to fulloutinvesting.com. That's a website we have at Ferris Capital Partners. It's really very simple. We have a sample deal on there. We have a video that walks you through our entire process for not only finding and selecting, but operating the deal through the business plan all the way to exit. So you can learn a little bit more about us, and you can also book in a time to talk with us at any time. If you like what you heard today, please like and subscribe and share with other high net worth investors that that you think could benefit from this. We love and believe in you. Have a great day.